Hey guys, welcome back. This is your boy MC Fire coming at you again with another Sunday night special, Sunday night recap. My favorite by far, because this is where we take the most time and talk about one of my favorite topics, the market. Right? We got our handy dandy, getting to the bag cup right here. Yep. Take a sip of that goodness right there. The reality is, this is where it's my favorite because we get to spend the most time and actually talk about the plays that are coming up, plays that we're in profit, different plans that we might take stop losses on. So this is like my favorite time. Definitely talking about the markets for sure. So without further ado, let's dive right in. Before we kind of get into the actual charts, let's go take a look first at the overall sentiment of the market. So here, we typically like to start out with kind of just a snapshot of what the overall market in their sectors are looking like. This is a you can go up here to www.barcharts.com. I pretty much just keep this in my favorites and refresh it every day and kind of look at it from time to time. We want to see which sectors are outperforming and which sectors are kind of lagging. So you can see already, there's already a difference in the market as it regards to some of the sectors kind of reeling to the downside and some of the sectors really pushing to the upside. You have consumer services making a huge push to the upside. Then you have the tech sector as well as the consumer discretionary sector, and financials is also up there. So we'll go ahead and we'll make those pretty apparent for you guys. It's communication, financials. Get rid of these guys. Get rid of this guy and then this guy. So these are your relative outperformers. The gray line, or the black line, I should say, is really the market. So things above that is where you can find your outperformers. Consumer discretionary kind of coming in big from being a big time lagger in 0805 all the way up to now being up there with financials. Financials kind of reeling a little bit, but the reality is XLC, essentially communication services, really taking off there. So something to watch out for. Communication services, a lot of strength. It can be as powerful or more powerful than the tech sector at times if you look back here. But a lot of times the communication services and the tech sector, sorry about that, communication services and the tech sector kind of going in tandem, like peas in a pot in some cases. Sometimes one stronger than the other. But here recently, they've kind of been strong together. So keep that in mind. And then if we switch back off and take a look at some of the laggards, we'll go to healthcare, utilities, real estate, energy. Let's get rid of where what is this? Oh, utilities, I believe. It's really utilities right there. Boom. So you got some laggards. This real estate. Yeah, throw that on there. Consumer staples, materials. Right. So this is kind of where my idea of, well, if you're looking to buy a long-term dip or looking for value, right? You're looking for a buy bias. This is kind of where I like to go shopping. So you could say healthcare, real estate, energy, consumer staples, and materials, right? Now this is where you need to be a little bit more picky. I don't know what just happened here. Are we still live? We still good to go? My screen just kind of did a whole topsy-turvy whoop-de-doo. I don't know what that was. Yo, what the heck is going on with our tag today? This is super weird. Let's see. Is OBS still OBSing? Okay, I think we're good, guys. Sorry about that. Computer's being super weird. Just bear with us on that. We might have to edit that out. And here, let's do this. Okay, there it is. Okay, sorry about that, guys. The computer screen wanted to be finicky and just jump around. So I hope we're gonna have to run that back and maybe do some editing. But where we left off, right? These are your value buys, and then you could use certain tools like this guy right here and find out what is good in those sectors. Or excuse me, this tool right here. So if we're going to, let's say, consumer services, or what do we want to look at, like XLRE, you can come over here, and we'll do that for showcase sake, XLRE. And we can see, all right, what are the holdings inside, let's say, real estate. Come over here and put them in your handy dandy holdings list. I like to take maybe the top 10 to 12 holdings. One of my favorite here is IRM. Really like IRM as a play, and you'll see why. You also got Public Storage, Simon Property Group, Equinic Incorporated, and American Tower. You know, a lot of these are the top holdings inside of this XRE. So this tool is also free. You can go to etfdb.com, and because you could do that, you don't have to spend a lot of money on these analysis tool. You can kind of build the analysis as you need to, and it's free, right? Really good stuff. So if we wanted to look at some of the fundamentals, like in IRM, one of my favorites, come over here to now this one is not free. And I like to use this a lot just to kind of get a snapshot into what is what's really going on underneath the hood of individual companies. So price being up a lot, over 75%, revenue climbing, free cash flow kind of waning, but dividends have kind of been, this is almost a dividend aristocrat, kind of slowly rising, right? Cash to debt ratio, if you think about real estate, makes more sense. So that don't really get surprised at the debt to cash ratio on this one. This is a debt intensive business. It's in the real estate sector. Something to think about. What we do want to see, what we really want to see is free cash flow. Where is it? Up here, increasing cash flow is the income of any business, and that's kind of waning. So as it stands right now, not looking too good. But, you know, as it stands right now, then income, kind of the same thing, not looking too good. Maybe they can turn that around and you might be able to get this at a discount. If you look at price very quick, we'll see that, you know, it's starting to flatten out here. Been in a very steady incline over the past year, and over the past 5 years, also same thing. So really nice buy. It was kind of trending sideways, but here recently, over the last couple years, really kind of took off there. Something to keep in note. So this is kind of why I like to use these tools. This is kind of the day that we kind of go over certain things like this. So if you guys have questions on that, hey, today is the day we look at that, right? We're not going to go through the entire XLRE, but as an example, I wanted to show you, hey, if you're looking for value, this is where you do the research while things are cheap, because everything else, like these guys, communication services, they're already in the stratosphere, right? They've already made their move, and you should have been doing your research when it was down here, doing the research when it's on the low. The markets is the only environment that I see, excuse me. The markets is the only environment where I see where people get excited when there's a line around the corner. But people don't ever get excited when there's a discount. Like if you go to your store, like here recently, there's a Black Friday sale. People get excited about that, man. Like things are going to sale. Nice. So people get excited about that. But if the prices are high on things, well, nobody gets excited about that. They want cheaper prices, but only in the market. Only in the equity markets do people get excited about when prices are high. Well, it's good when you're in, and that's really kind of the point. People's reaction to it is a lot of times from their friend telling them, yeah, I made an absolute killing in whatever stock that is, but that's after a move. They should have been in like way before that. So that's why for value, if you're looking for value, we want to be doing research inside of what's it called? The sectors that are lagging, like these guys. We want to see, not utilities, sorry, consumer staples and materials, right? We want to see inside of consumer staples, materials, healthcare, and energy and real estate. What are the outperformers, and can we get those at a buy or at a good premium, at a premium discount? It's something to think about in if you're long term buy and hold investing, buy things when they're low. So here, like recently, we saw that real estate was the laggard. Kind of more towards the middle of the year, we wanted to diversify, and because it was the laggard, we started looking at stuff like IRM, Property Group. Let's go actually take a look at where some of those are today. So we got IRM pulled up, and where this is kind of to the point, we wanted to find an outperformer inside of a sector that had kind of been hit relatively hard. Okay. And so this is kind of when we were looking back at the IRM. If you could see, these are the arrows where we got our buys, right? A few of them. And I think we added on to the position later. But this is in the third part of the year. This is the March area, a March timeframe. So in March is when we come back and we look at, hey, what's underperforming the market? If we go back to our bar chart over here, what's underperforming the market in March and in February, March was XLRE, right? Kind of below everything. So, and it kind of continued to fall, but we wanted to pick an outperformer in that sector to be able to kind of get the edge, so not take too much heat, and get it at the right price. So the stuff starts to get in your watch list as it takes some heat. This is what you're looking for. You're looking for maybe healthcare or utilities. Finding outperformers in those areas, put them on your wealth watch list, so to speak, and then when they start to make a trend change, that's when you're prepared to jump on it for the long haul. And then when we come back over to the charts there, and we see that, okay, IRM, we have a weekly chart of IRM. Let me scale out. Actually, I'll make this full screen there. When we see that, okay, if we're buying back in this range in March, right? And we're looking to see now, that's where the analysis kind of plays forward. And the analysis plays forward in finding value, looking for your outperformers, and then taking those outperformers and buying them when they're neutral or on a dip, not when they're in the stratosphere. So, like, there's other companies like that, like Simon Property Group, but this is one of the ones that is absolute home run. But we didn't do anything crazy, right? It's value. We look for an outperformer within value that has a good record, and we take a buy. And if it's got, it's got a positive outlook, and then we have a plan for that. Maybe if it trades below the range of here at 43.59. We got in with these arrows. If it trades below this, we let it go. We can be wrong in the markets, but we ideally want to buy an uptrend. So let's say it's in a downtrend. We wait till it crosses an uptrend, and then we put a stop below whatever your risk tolerance is. But we kind of got absolute triple right here, right? Absolute just took off, or an average price of $50. It's already up to 120, and we took some off the table even right here. And then looking to, if there's a position in play here, which there probably is, we're going to go over the daily real quick. Slide to the right. Positive territory. There is a setup candle currently on it. So there might be a potential for some short-term play, maybe taking it up to the highs of 130 potentially. There is buying pressure. So, hey, we could see a short-term play kick off, and we add to our position as in regards to options. But our long-term buy for this was, in March. That's what's so crazy about it. But kind of moving on with what we're kind of doing as regards to how we normally do it here on Sundays, or how we're going to start normally doing it here on Sundays. We're going to kind of go through the bar charts, and we're going to go through the Fed Watch tool. The Fed Watch tool is which is really important in the markets, is kind of knowing what the emperor of the markets is doing, Jerome Powell. Jerome is basically going to tell you what your interest rate is going to be and how expensive, how much money is going to be circulating in the market, if we're pulling off money or if we're adding on money, if we're the cost of doing business is going to increase or decrease. What do I mean by that? So when people borrow money, right, there is a accrued interest rate. We call it interest rate, but that's essentially the cost of borrowing money. If that is expensive, people are less likely to borrow money. If people are less likely to borrow money, then they're probably not going to buy homes, buy cars, invest in new businesses, take a risk because it's expensive to do so. If it's the interest rate is low, people are more likely to do that. So a lot more money is sloshing around, and people can, invest. So when you want growth, you typically cut interest rates. When you want to stop so much inflation, because as you put more money to the market, prices tend to rise. To curb that, you ring in the inflation by making borrowing money more expensive, essentially. The Fed has said that they are planning to become more dovish. They do plan on cutting rates, and you can find an analyst tool of what the Fed is likely to do here. So the current range is 450 to 475 for the current range, right? Value wise, and then they might cut it to 4.25 to 4.5 here. And there's an 83% chance that analysts are saying that, hey, the Fed will cut rates at the next meeting. The next meeting date is the 18th of December. So currently it is the 8th of December. If they cut rates, we could continue to see a rise. And now at some point, the rate cuts are going to get priced in as the market pushes to new highs. So it's just something to keep in mind. The rate cuts, just like on the way down, the rate cuts were kind of pricing in as lows. And before the rate hikes got finished, the market started already recovering. So it's kind of a little bit of trying to get ahead of the game there with the markets. But this is another free tool there, right? We're gonna go start taking a look at the major indices and see if what we got there. So we'll start out with the SPY, and then we'll move on to the Qs, and we'll take a look at it on the weekly chart. All right, I like to look at the weekly, as to not be as so twitchy on the daily, right? The daily, the setups are there. We have our setups, but on the weekly, you can very clearly see that since the week of December of last year, the market has been in an absolute tear, right? On the weekly chart, not on the daily, on the weekly. And in that way, it helps us to get into longer term trends like a weekly and not really worry about the ins and outs of the market, right? We still set up a plan, but if you've been in a significant uptrend since December, I would want to know that. Like, I would want to know, like, hey, are we going into a downtrend? Is there an opportunity for me to make a big play up or down? Right. And with the setup that we have here, it can definitely do that. Okay. So, if we go look at these so-called, these lines right here, kind of zoom in, is there potential for setups within those time frames from the weekly and looking from a higher time frame to a lower time frame for a setup? Let's see. Nothing really here. It was a kind of a rip. Over here, we like to buy the dips and short the rips. So this is negative territory indicated by this weekly trend change red. And there was maybe some indication that there was a setup to the downside, but nothing really that gives us defined edge. But here, as we transition into buying territory, right, as a trend change on the weekly shows here on the daily, that is a little bit more pronounced. So here, some slight follow through. We respect our buyers starting back here. So even if you take this buy, you don't really get stopped out here. And what do I mean by that? Let's say, for example, this setup candle comes into play and we go ahead and take the buy. Our stop out as a 2-bar professional, 1, 2, there's your stop, right? The next two lowest bars. So no more than that. This is like the absolute lowest that we would do, but this one low, right? 2-bar professional is how we like to play it. And so you get stopped out if it crosses below the low. Doesn't really happen that way because we respect all of our buyers. And it ends up pushing very, very nicely to the upside there. It just kind of rips, right? And you kind of saw that setup here when it's in neutral territory, kind of trending sideways. Right here, this is choppy rotational play. Nice squeeze here, pushed, and then you get a rotational play, and then follow through, right? There's also a clear setup here. The setup's here, and then it crosses above. Nice rip, follow through within a week, maybe 2 weeks. Same thing here, stop out at the low, follow through. You be essentially riding this all the way up. And now you do get a blowout candle kind of towards highs where you would let it go. This also could be considered a blowout candle. Same thing here, 422. Nice setup there. You get heads up, crosses above, stop out of the low, juicy rip. So the setup giving you the edge is pretty nice. You do get a not necessarily where we like the edge, but it is there, like an indication that hey, buyers could be stepping in on the setup. So boom, it takes off. Same thing here. We'll take this opportunity to pivot to the Qs because we didn't take the one on the SPY. We did take the one on the Qs. The SPY at the time has higher relative strength now that we know that now. Hindsight is 2020. So let's go look at the Qs in the same scenario. The QQQ in the same scenario. We didn't take the Qs, but it was here. But we did take the opportunity to get into NVIDIA at the time. So in NVIDIA, we got leap contracts. It was kind of doing the same thing as it pulled back. Nice clean indication to buy here, but we stuck to our system. We only got this for 3 weeks, hoping for that rip. Didn't happen, so we took the loss there. But then as it came down and started respecting some moving averages, and we got a kind of a buy bias as well as this setup candle that hey, there might be a new rally. I went on and took the chance again. Sometimes that happens, right? The market is not perfect. It's not gonna stick to your invisible rules, but you do have an edge, and that's following your edge is going to give you make you the casino. You need to follow your rules. So with following our rules, we took it with a new stop out at the low, but it didn't end up ribbing very nicely. No, as it pulled back, no stop out there, and it ended up running to where we were able to roll it pretty high, and it did peekaboo up to our new strike. So we pulled a lot of money off the table with this play there. Because it was really pushing, really volatile, and those premiums were juicy. So we just rolled it. This is a leap contract, but we took that opportunity to get a relative outperformer in the Qs, while everything, the SPY, the Qs, everything was kind of dropping to the downside there, right? Everything was kind of on sale around this area. So we didn't necessarily want to get into the SPY or the Qs. We wanted to get in one specific stock. We wanted to get into NVIDIA on a discount. And one of the previous videos that we looked at, we told people specifically when it was up here, you need to wait. You need to wait as a pullback. It's like, no, we want more. We want a bigger pullback, and it pulled back. Boom, right? Got our setup, fell through. Sometimes it does. Next setup, took it, ripped, right? Absolute massive for massive gains. So, and same thing here. Our mentor actually was in like back here. Something crazy, right? Up multiple thousands of percents on NVIDIA, right? Made his entire year. So shout out to him. And shout out to anybody who really likes to take this as an art, because it is an art, right? I believe it comes with certain skills. So we kind of looked at SPY, looked at the Qs. We're going to also look at the Dow and the Russell this time. We'll come over and do DIA. Right, you got the Dow. Very similar story, right? The Dow ripping relative highs, right? Really crushing it. A little bit more choppy on the Dow, but kind of same thing applies, right? You're in a very defined weekly uptrend. We'll mark that here. Starting back here at the 11th of last year, 11/20 of last year, right? Not too bad. Really defined uptrend. And is there potential for buying opportunities here? Well, yeah, right here. There's an opportunity for a buying opportunity clearly right there, right here, but you do end up getting stopped out on right here. So you can take the buy here. There's follow through, really nice follow through with a blowout candle indication too as well. Nice. You can take this. You probably get stopped out though, depending on, yeah, you get stopped out right there, which is fine because it ends up going sideways. So the reason why we have it like the way we have it is because we want something with very nice follow through immediately, right? We almost want to go instantly in profit. Instantly. Here's one that has pretty solid follow through, right? Almost immediate. Same thing here, immediate. And here, same thing, immediate. Now you might get peekaboo stopped out. It comes with the territory before this fat rip. It's just one of those things that it happens and you deal with it. It happens. The setups here, you maybe get the entry. There's a pullback, and then well, bam, yeah, it takes off, right? So something to think about. If you're a long-term buyer, you're just adding at these points. One, you might be adding here, might be adding here, might be adding here, might be adding here, and might be adding here. No worry about looking for the stop out until maybe you get a major trend change, right? Or it really just rips and you're at like 3 ATR or 4 or 5 ATR. In some markets, it's like 5 ATR, right? It's insane of some of these tickers that are up there. We also can look at the IWM, the Russell. I've been watching a lot of analysts, and they've been saying that small caps are supposed to absolutely feel the full brunt of this new economy. I don't know. I don't necessarily take financial news as gospel. I think really financial news is their marketers that they're trying to bring attention to whatever their interest wants them to bring attention to. So it might not be necessarily something that has an edge or a clear plan and a trigger. So I would caution people against taking financial news and making a trade based off financial news. They might bring something to your attention, maybe if there's a potential play involved, or it's good to hear that there might be a potential play to the downside. Like I can give you a prime example. All the news that's been coming out with Boeing, giving you a heads up. Hey, what's going on with this company that is a long time airplane manufacturer? They went on strike, and they had a series of accidents, right? So you can kind of see that has had effect on their bottom line. Really, right here, earnings has just been absolutely throttled. It's not too good. So if we can, let's say, surmise, well, that's going to be on our wealth watch list because there's only two, Airbus and Boeing, that compete in that space. There also is a new Chinese startup. I could probably get the name for you guys, but there's a new Chinese startup that's trying to enter the space. So there's only 3 companies globally that really build and provide parts and quality assurance for major airlines and planes. They have defense contractors as well. Boeing is one of those. So you hear the news that Airbus hasn't really come in and stepped and filled that gap in demand. So that gives Boeing an opportunity to really recap some of these losses if they can, and that could be a very juicy play, right? We're as high as 44.66, but not necessarily looking to get back to highs. We could get to relative pivot highs at 468. Would you be okay if the market turned back around at 154 and you're letting it go at 256? I think you'd be okay with that. And that's kind of the point. You want to be just abreast of a trend change, major pushes, trend change, kind of slight pullback, and then a push. That'd be kind of nice, right? So just kind of be aware of what is happening with the trend, and is there some follow through. But let's go look back and see at the system. Is there an opportunity for you to kind of get into this position? You see the trend change here. You hear a lot of bad news. Okay, that means there might be potentially weaknesses in the stock, right? As it starts pushing up here, there's a setup. So you could take that to the downside. Boom. Take that setup to the downside as it breaks the low, and then there's some follow through there. I think we day traded Boeing based off bad news, but we didn't necessarily take this full candle setup and ride this puppy all the way down, right? Really nice rip. Probably would have been rolling right around here. Would have got some pullback. Maybe let it go right around there, which is fine. At that point, we just hit a nice double. Absolutely crushed it with that play. Probably shorting anywhere from 190 or like 200, 199, and you're running the blowout candle of 182. $20 move. Nice double there. Absolutely crushed it, right? Another rip happens here. Little indication on the high side, running into resistance. Break of the low. You could take that with a stop out at the high. That's doable. We kind of like them to be green before it does that for a very nice follow through, but it does follow through, and then there's more blowout candle or continuation of the momentum, and then it continues. Boom, absolute capitulation here off of earnings. So. And the premiums would be swollen by this time. So it would have been a good time to get out if you're a buyer of puts anyway. Just keep that in mind. It happens again here. This is an earnings play. It is not in open water, so just keep that in mind. But Very, very nice setup candle here that gets basically just run over. And, the rest is history. Kind of continues to fall. So, setup, the edge is good. The setup's good. The news, when you start combining all those things, massive results, massive opportunities there. But we're looking for Boeing potentially on the bounce as it approaches kind of lows here at 120 or relative lows here at 120. The current last pivot low was 136.94. So things can turn around. You can have a relative buy bias here and a push, but are you okay with this risk going, if you take a buy here and it going down here and say the stop out? Well, I would say, yeah, I wouldn't necessarily get my full position while it's in the downtrend, but you can definitely take, one or two shares to keep it on your watch list or whatever. And then as it trend changes, really step into your position in full or, bounce off the lows, stepping into full, right? When it goes on sale. Good stuff. We can look at, so IWM there. We'll also take a look at, now we do have for the Qs, we're going to go back to the Qs for a second because of my notes. I want to keep a note that, yeah, the market overall is at relative, let me pull up full screen for you guys. Market's at relative highs. So it's pushed to highs. And then when you look to, I'll have you in play. We'll go look at our in plays here in a second, if we can get this out of the way. Shout out to it. So if you look at the grid, right? Even currently, right now, because it's 24-hour trading for some of these things. You got this nice push with a bull flag. This is a extremely bullish setup. Bull flag here. It pushes trend sideways with buying pressure, right? Making higher lows, higher low in after hours. So this is massive because the close was at around 260 or 526, excuse me. And right now it's already pushed a whole dollar. So if this continues into the open, man, we could see a lot of, so far this is showing some relative strength compared to the SPY. We can look at SPY. It does rip, but relative to highs, not necessarily pinging off that pivot high there. Whereas the Qs are pinging past relative highs. So that's what I mean by relative strength. The Qs relative to its pivots have broken them and they're moving to highs, whereas the SPY, its last pivot, it's about 50% of the way there from pivot low to pivot high, last pivot low to pivot high. So Qs showing relative strength in the market post market close on Friday. Keep that in mind, as some markets are 24 hours and they kind of take maybe an hour break. Right. All right, so we're gonna start getting to some of our plays. We're gonna do an ETF check though. And then we'll get into the overall plays. Let's go open flex grid. I think this is our deal here. Got so many deals going on. Relative outperformers. This is kind of what your bar chart looks like, but on a daily, right? So we want to, you can like actually blow this up right here. Yeah, nice. So we kind of see SPY, and then inside the SPY, you got the XOK, XLF, XLC. Why do we have XLF twice? Let's see. What are we missing? XOK. Got it. XLI. Where's XLI? You see, there it is. Okay. XLY. Yep, it's there. Yep. Sorry, guys. Bear with me. I don't know why we have XLF twice. XLRU, XLP, XLE, XLU, XLB, XLI, XLC, XL. Do we have the energy sector? Or do we have real estate? Got real estate. Got energy. XLB. Got XLB. Yeah. XLE, XLF. XLV. XLV. Aha. XLV. Dirtbags. Update that, right? Yeah, man. Sorry about that, y'all. Yeah, we can't let that go. We can't let that slide, right? We're professionals out here. All right, so with this guy, we're gonna go back and look at the bar charts, and it kind of reflects what we were saying. So the healthcare sector, right? Because everything's here now. What's really lagging? Your healthcare sector is lagging. That's your XLV. So on the daily chart here, right, there is some potential to look at the XLV. So let's go take a look at our laggard and see if we can find some value within the laggard, right? Definitely within a downtrend. If we go look at it, right, see downtrend here, very, very clear, very defined. And you might be able to take a position to the downside. We found the laggard in the XLV, excuse me, the healthcare sector. I'm gonna get rid of all this so you can see. So relative to everything else, this sector is underperforming the market, right? We want to look for outperformers in an underperforming sector for value, meaning who is the guy putting in the work even though his teammates are slacking, right? That guy, in this case, we come over here and we see, okay, we have a flex grid of the holdings of the XLV. And you can quickly figure that out. We can go over to our tool here. We'll type in, it's free, ETFDB, right, XLV. We'll type that in, the healthcare sector, XLV, right? We come down here, we look at holdings, and we see, okay, Lilly, United Health Group, Johnson & Johnson, Abreva, so on and so forth, right? Now, there is one on here called Bristol Myers Squibb, right down here at the bottom. Makes up 2% of this ETF here in the top 15 holdings. So it's pretty sweet that we have it on here. 2, 3, 6. So there's 11 slots. Haven't really updated it too much because they don't really change too much. But in this case, it's kind of at the bottom of the list, but it's the outperformer of the group. So I'll go back over here and show you that. So, right, we have a Bristol Myers Squibb here as an outperformer inside of the top 15 holdings of the XLV. So when we come back over, so you guys can see what I was kind of showing you there, in an uptrend on the weekly, right? See, in an uptrend since the 7/29 of this month, and been pushing ever since, right? So there's been some opportunities to take that outperformer, but it sticks out. If you see, right, it sticks out like a sore thumb. The XLV, if we look at our bar chart, top down view, that one is underperforming the market. So we found an underperforming sector, right? We found the holdings within that sector. Then we see, okay, snapshot quickly with the momentum and trend indicator. How are we able to view which one's outperforming? Well, double green. How is the sector underperforming, but you're overperforming in that sector? And what is this on a weekly? Let's see. Let's go open it up. Yeah, this is on a daily. So you're overperforming in kind of a daily sense. We want to see on the weekly, but we want to see who's overperforming kind of on the daily. So on the daily, the Bristol Myers Squibb is definitely overperforming. Okay, so we go back over to our chart here, and then we just start marking it up with our normal edge. Weekly, it's green because it's overperforming. And we see setups all over the place, right? Could have gotten a setup here. There's definitely a setup candle right there, clear setup right here. Would have stopped out at the low, right? Respecting all of our buyers. Same thing kind of here, stop out at the low, respecting all of our buyers. Nice rip blowout candle right there. Probably would have been a clean indication to make a decision. Take some profits, get out, whatever you want to do. Here, it's definitely indicating, hey, this might be the move. It might be done. And it's at 3 ACR anyway. So definitely good time to make a decision to take some profits, just to put that in mind, right? And there's a gap, very juicy gap here. So when you put all of it together, combined with the edge, with the gap, with the setup, it just kind of makes a lot of sense to cover your fantail and take some profits right there. And that comes with skill. Sometimes you're gonna be like, oh, I can keep going, gap and go. Well, you got a very, very wide gap here. And the likelihood for it to fill that gap is pretty high. It does end up filling that gap to get some liquidity, and then it kind of chops around. So this is where you would want to look for value. And if we go back to the flex grid here, maybe there's somewhere else that we can find value, ABT and Lilly. So let's go take a look at that. So these are double yellow there. Let's go over here, ABT and LLY. Take a look at that, ABT. Boom. In an uptrend, relatively on the week. We'll mark that up. right? Boom. So let's say you wanted to be a long-term buyer in value for these stocks, right? Want to be a long-term value buy on the stock. You could say, okay, if we get a nice clean setup, or even if we, breaks above weekly highs, we want to be a buyer, right? But there's definitely a very clean possibility to take some value buy here. And was there any setups that occurred? Nice pullback here. You did have a kind of a setup for continuation. So yeah, you could see that there. But other than that, nothing else. It came through. You did get an opportunity to buy the dip. There it is. Very clean and nice follow through. And then LOY. LOY kind of struggling a little bit. Weekly wise, in a very clean, very defined downtrend. It was almost a setup to it's definitely a setup to the downside there. We did actually get smoked when it did the transition. This is the only bad part. There might be, like, when you get a transition like this, risk management is important, because we got caught up in the gap trend change. Does happen. So what do? If you find a good setup, that doesn't necessarily mean over leverage. You want to stay within your leverage parameters. So we still, took a loss on that. But the reality is the loss was minimal. Maybe at the maximum, you should only be putting 2% of your account in any single play anyway. So this play, although it went against us, it's only 2% or less of our account. So the reality is yeah, you got burned because you're not going to be perfect in the market. But this more than was manageable because of our proper risk management, right? But yeah, but at the time when we did take the buy, it was in buy territory, and then the transition, and we got caught up in that wash to the downside, absolute gap and go. It was earnings to us all, by the way. Buy is buy. If you were, say, for example, wanted to get it at close to 3 ATR and off the resistance bounce back here, you could have did that as well. Not really looking to be but this is kind of the point. If you're looking for outperformers and you're like, okay, this guy is a relative buy. Let's say it takes another dip and starts making higher highs. This is something to keep on your watch list as a relative outperformer in the sector. And if it starts making higher highs and higher lows, buy it on the dip, wait for it to come pick you up, and you could take that. Or you could just take XLV as a whole, not have to worry about individual stocks. And when that starts making relative higher highs and higher lows, or really even just higher lows, you can buy those relative higher lows. But I would want to wait till a trend changes for that. And you can kind of look how that ETF performs, and does it give you an opportunity to get into it, right? But we did take this, and it gave you a clean opportunity to get into it to the downside. So really good base hits there for the XLV. All right. So we did find those relative underperformers and an outperformer within the underperformers to kind of show you how to do that. We also are going to take a look at some of our in plays and some of our wealth watch lists and other watch lists that we have going on here. So we'll just kind of go down the list here and showcase what we think. Little grim news. United Health Group CEO was assassinated, or he was deleted, essentially. So really, it's unfortunate that in today's world that we have crime, and it does have an effect on the markets. It is super unfortunate, and I wish the best for his family. But because that did happen, United Health Group did slide, right? The markets reacted to his passing with this very sharp move and follow through to the downside. We will say this, though. If we go look at some of the fundamentals of United Health Group, we'll go look at our Qualtrim and see what the status of the company is as it stands right now, right? It is in a very positive uptrend, so we'll see. This probably could have a very drastic effects, but if we're looking at fundamentals, right, the free cash flow is pinging relative to almost relative highs there. You got 12.95 billion of free cash flow. That's a lot. It doesn't really go into negative territory too much, but not it's looking good. So his passing could have a very, very drastic effect on that. That is something to watch. Watching the fundamentals and can they recover? Cash to debt ratio isn't too bad. And then dividends, let's see, really increasing dividends. So shout out to United Health there. But it's unfortunate to what happened to. There might be even some news on his passing. Um, yeah, there's not too much there as regards to that. But yeah, it's really unfortunate what happened to the CEO there. And again, heartfelt condolences to his family and colleagues and friends and the company as a whole. Man, you guys, when you make a company, or even what we do here, you start to attach to people that are moving in the same direction that you're in. So you guys are like a family, right? And when somebody passes, they have an impact. They have an impact into what goes on the day to day. People, they have an impact into people's bottom line and into the community. So the market kind of senses that. But the fundamentals, if they don't necessarily change in this stock, there's a setup here, right? You do have really increased selling. Sorry about that. I don't know. Hopefully our screen comes back in a timely manner and it doesn't screw everything up. Are we still live? I believe we are. We've been having technical difficulties all day, man. It's been rough. It's been a rough day for the computer. We'll just wait for it to unfoobar itself, right, so to speak. We still live? Should be. Yep, still recording. Very, very nice. So yeah, there's a clear setup here. According to our rules, right? It's in an uptrend. Rotationally wise, it has respected this kind of price level there. So we'll put that, and then we'll put the where it respected, pivoting to relative highs here. Boom. Put that couple tests there, and then all-time highs. We'll mark that in red because it kind of peekabooed up there. But we still want to mark it because we want to see on either lower time frames or whatever that it pushing too highs. Right? We want to know that that's a danger area there, right? So yeah, this is let's see, let me mark this as a spot. It really doesn't really respect the level. So very wide rotation on the weekly, which is fine by me because we want to see maximum risk to reward, what is potentially possible, and it did do that, right? Come down here, respect that gap, push up to this area, come retest, push down to this area. I would almost consider this in the middle as like fair value. Fair value test, right? It's just trying to find price, pushes, and then it ends up pushing to the highs and then rejecting and pushes back to where it respected. And it stopped here last week. So it respects this level. And if we could see some push, maybe you could, it's a very wide daily move. So necessarily, let's say, for example, you don't want to assume all this risk, right? You could deviate from the rules a little bit. Let's say, for example, statistically, shout out to Oliver Velez, but his theory for continuation is you could take this bar and divide it up into three parts, here, and one halfway, and then 2/3. You could say 1/3, halfway, and 2/3. The likelihood of its continuation would happen at the if the price pulls back within the upper third, right, of this pullback. The continuation is very high, like highly likely. It is reduced, but if it pulls back within to the half area, like it goes down and pulls back to the half, continuation is reduced percentage wise, but it is still likely to push back to the relative last pivot. So its likelihood, if it goes back to the halfway mark, is at least to pivot, right? It can get there. Follow through is the percentage wise for follow on is drastically reduced. So if it pulls back into the upper third, cool. The continuation is highly likely. Pull back in the half. Continuation to pivot is likely, but follow through relatively low, right? And then if you take it to 2/3, pivot is highly unlikely follow through, is highly unlikely continuation. So you could kind of take that as a way to say, okay, instead of taking this entire bar, the 2/3 of this bar, if it crosses below that halfway mark, which is like right here, halfway here, if it crosses that, we'll put it right here. Then we could take this position to the upside and not have to wait for this whole bar or even this whole bar, right? And it makes sense too. If it breaks above this just kind of brought in trading range and breaks above that, you could take it a little early to increase your risk to reward. Your reward being up here instead of waiting for it here is like 1-to-1. It's more like a 2-to-1 kind of deal, right? So or 1.5-to-1 kind of thing. So just kind of, if the earlier you buy, you reduce your risk to reward. But that's how I would play that. We're also going to kind of keep pushing here. We've got, I think, what is it? BG. Yeah, we got this guy. Progressive. Good look on Progressive. Very, very strong uptrend on the weekly. Kind of the setup is the same. Here, we've got a really nice push into our moving average cloud there. This is an 8 and 21 period moving average cloud, which is fine. We just kind of use that to set the trend. Remember, moving averages aren't how we like to just trigger a trade. We used to do that, and shout out to our mentor. Cross above the 8 in previous week high would trigger a trade and stop out of the low of the previous week. We have since tried to redefine our edge with these pivots, because what I was finding is, with a week like this, you're missing out on all of this, and I was like, how can you get in all of that, right? So we were like, man, like we need a better way to do it, and shout out to that. And you can build. The cool thing about trading is you can create your own alpha. You can create your own alpha. So if you find something that works, and it works statistically and has an edge and it has fundamentals behind it, use it, man. Like that's why trading is so cool. But yeah, trend changes back here for Progressive, and then that dip that's right here, you kind of get an edge. You kind of see what's going on right here. Boom, right? Kind of same thing. Clear indication that people are set up to the upside. It could be a potential. So you could see this and then stop out at the low. Kind of cut into it early, right? As you can see, it gets back into that halfway mark. So pivot to the lows, as back to this pivot low is it's possible, but follow through is unlikely, right? So and then it's in an uptrend. So as opposed to waiting for it to break previous week's high and 8-period moving average, of course that would be right here. You get a little bit more alpha. Like let's say we put the candlestick here for what our mentor's edge would be, right? Boom, there it is. But our edge, our alpha is here, right? So we just slight eke out of alpha there with the stop out of the low there, whereas he buy here and the stop out of the same low. So we just eke out an alpha, right? Not too much there, but shout out to the mentor and shout out to edges and alpha. Also set up here, clear setup as it gaps. You stop out at the low here, respecting all of your buyers. Same thing here, same thing here. Very, very clean entry signals for Progressive. Moving forward here, very, very, let me really fast forward. Right, kind of same deal. We see a setup here, even here, right here. Stop out at the low, gaps, moves, runs, absolute runs to the highs. Almost into the 3 ATR territory on the weekly, and then nice juicy pullback. So if you wanted to kind of cheat and improve your risk reward there, you can almost say, okay, if it crosses the halfway mark to the 2/3 mark, let me know. Want to get in. Don't want to wait till it breaks here. Just want to increase my risk reward. That's one way you could do it on there, and the stop out would still be respecting all your buyers with a 2-bar professional or a stop out of the low last pivot low there. Let's continue on PEP. So I want to show PEP because we did end up getting a stop out on PEP, right? But the play, it happens, man. This is kind of the point of respecting your rules, and sometimes it's not always going to be peachy keen. So on the weekly chart, right, it's in negative territory right there, but right? We have a setup candle. It's there. On this day, it kind of goes against us. We let it go, and then just follow through, hitting essentially our first sign of danger, take profit right there, with a potential secondary right there. Would have been a nice base hit. That's kind of all we were expecting, but we did get stopped out. Nothing to really write home to mom about and cry home. These things happen, and that's kind of the point that we want to make. These things do happen, and don't beat yourself up about it. If you get a stop out, take your lick. There's going to be a lot more opportunities in the market as we're showing you, and you're going to get some like XLV or even Palantir IRM that you're just going to see massive growth. Right, you're going to see absolute massive growth. We'll keep going down the list here. McDonald's, of things that could potentially move individually. We have a setup here in McDonald's. Yep, very nice. Now with our mentor setup, right? It's above the 8-period moving average and above previous week's high. So trigger entry on this week as it breaks above high with stop out at the low, and you could trigger as it setups in the same manner, right, for McDonald's. So it is in play. It is there. Have fun. If you're already in, shout out to you. One of my favorites that we do have a buy bias has started to trend positive. So shout out to us. And this is kind of what I'm talking about with relative underperformers when you get a buy bias. But where are we buying? We're buying at a discount, right? This high or absolute high has been 22.19, right? And previous pivot lows that you're tracking, hey, it's kind of pinging off the lows is $3.18, right? And with our buy bias, right, we're seeing that as earnings kind of potentially improve, right? The trend is starting to change. Unbalanced volume is trying to change. And, we got some shares here, got some shares here. Not necessarily the best buy. Probably you want to get it closer to 3 ATR. But, it is what it is. We just wanted to, these were preliminary buys that we just want to get in on our first take and add as the trend changed. So we already kind of got our risk buy, so to speak, buying at the lows. I was like, hey, I'm willing to assume the risk if it continues to go to the downside. But, as the trend changes, we might see a different look, right? So, it could absolutely rip, with smaller stocks, big players stepping in and buying it has a very, very nasty rip effect. And that's great for us, right? It just, almost parabolic. So we like stuff like that, right? So it is on the watch list and it is in play. So we're watching that. Really a lot of buyers stepping in throughout this whole rally. So getting in at this 3 ATR actually would have been wise. But if it's improving in the category of earnings, that could be a really nice catalyst, right? Shout out to this play. We can go look at, we'll just keep going down the list. Uber. I think most of these are here. So we'll just start clicking on these guys. Uber downtrend, recently new downtrend as of this week. So we're looking to short the rip. If there's a pullback in a nice setup, keep an eye on Uber, but as it stands right now, the downtrend is definitely defined. 21 period moving average is now trending negatively, and you got a death cross here of 8 crossing below the 21. So shout out to it. Unbalanced volume is also waning, making lower lows. So it's looking like all of the things are needed for a nice rip up into this area and potentially take that down play. So I'm gonna go ahead and put a potential halfway. I just want to see it, but I'm really kind of waiting for a setup. I just want to see if it gets up to that zone. Let me put it right here. Gets up to that zone, and will it give us a heads up that there's a continuation? Actually, yeah, we'll leave it at the 50% mark. That's fine. 50% mark or bust, right? We just want to see if it gets up to the 50% mark and see if it starts trending back downward. ADP in stratosphere, it is in play because there is a setup candle that got washed even up here in 3 ATR. This isn't the first time. It can stay in that 3 ATR territory and just keep going, right? With the market environment that we're in right now, right? you can start seeing a lot more of this. The reason why I say you can start seeing a lot more of it is because people are looking for value, but in a market environment where, again, getting cheap money is going to be a little bit more prevalent. You're going to start seeing more stuff that is in 3ATR just absolutely rip, right? And what do I mean by that? Like a good company like PLTR, shout out to PLTR, but we're well into the 5 ATR range, right? And we've been in PLTR for a hot minute. We kind of got our overall buy bias back here, and this is kind of what I'm talking about. We take an early position there, and we just kind of keep it on the watch list. When the trend changes, we've been adding through there. And then as it goes parabolic, we've been starting to let some go. Palantir has been in the news of because of the CEO and his network and his connections with some prominent members and of society like Elon and Bezos and some other people, right? He's kind of in the cohort of like these super coding geniuses like Elon, Zuckerberg, that group, that cohort, to be his company would absolutely profit massively from AI, and it is right. And so we kind of let some go here, kind of let some more go here, and we're just gonna kind of hold it. The reason why we want to just be a holder and not just look at necessarily fundamentals is because when we go look at Palantir, and we're just kind of showcasing why things can go into the like 5 ATR territory, is when you look at revenue. Look at that. Just the growth is insane. Constantly, month over quarter growth, just not even skipping a beat. That's number one. EBITDA recently went positive back here, and steady growth there. When you look at cash to debt, there is like, it's not struggling at all. That's kind of the point. Not struggling at all, and the aspect of it just keeping, not really being in hot water with the revenue, with the cash on hand, it's really good. Free cash flow, everything that we're talking about here are like looking under the hood of this of the company and seeing that, hey, it's not free cash flow. It's granted, this free cash flow is 415 million, so not too big on the free cash flow. We're talking about billions here, but when you look at a company that has a great potential to profit drastically from AI, things are going to start pivoting from the producers of like AI hardware, because there's been so many buyers of like Nvidia, TSM, and ASML. Like what they produce, it's already kind of out there in the market that companies like Apple, Microsoft, Google have been absolutely just buying hordes of this stuff. Palantir is kind of one of those companies that is in the position to profit as those services from AI become more prevalent in the market, right? For the average consumer to use those AI services to increase productivity and to decrease lag and increase efficiency. So this is one of those companies that is in that rollover to pivot from the producers of the actual hardware of AI and to have integrate into their systems for efficiency. And you're already starting to see that here. So outperformer for sure, with the revenue, price, EBITDA, free cash flow, and cash to debt is immaculate. Great fundamentals for a really juicy company and something to watch there. Okay, so this is why this thing is hot. But again, people will tell you about it here, right? But if you watch this channel, you'll be the ones who kind of catch it on a buy bias back here, and then see it just explode, right? With some fundamental and with some, analysis as you come across your feed. I mean, would you be okay with taking the buy at like $9.94 and being able to offload it at $66 or even $76? Would you be okay with that? Most people would say, yeah, I'm okay with it, right? If you're not, then what do you do? So we need to go ahead and move this bad boy. What we do here is we'll change this to white. And then we'll put this as the new red. Why? Because it's pushing to relative. This is a new all-time high. And it'll be red. Look at that. Boom. But yeah, well over the 3 ATR mark here. Well over it, going parabolic, right? And so maybe it takes a dip and you get an opportunity. But even here, I was like, ugh, I don't know if you want to be a buyer, right? The setup is still in play. It absolutely made massive rips. So yeah, shout out to the setup, man. You probably could have took this and like stop out at the low there, and but you know it was there. Like they even put it there. I was like, I want to see if it, you know, at 4 ATR is gonna go parabolic, and it never pulled back. It's just like, oh, setups there, rip. This is absolutely massive, right? So shout out to it. We the reason why we were taking some off the table is for personal reasons. That has nothing to do with fundamentals. That's why we're taking some off the table. But good stuff there. Um, Continuing on, Meta. We had a butterfly actually in Meta that went to where we relatively wanted. We didn't get out in time, and you know, it just expired wordless. So shout out to Meta. I think we already talked about AVGO. Oh, we did not talk about AVGO. So AVGO set up here with a stop out of the low has since rolled it at this position here, kind of first sign of danger. So we went on and took that roll, right? Taking some profits off the table, almost eliminated our risk down to zero. And that's kind of why we take a roll first sign of danger. If it's going to continue, awesome. We're still in the play, but the risk to our hard-earned money, our hard-working capital, is null. And if you can kind of get that grasp of that concept, if I work and I'm in a position and I take the buy and it moves in my direction and I roll that contract, I essentially pull my initial investment off the table, right? But I still have the position at this new established higher price. Everything else is profit. So I pull my hard-earned money off the table. I get my money back, and the option contract is still in effect for any continued gains into the future. That is massive. Sometimes you even get to do that at a profit and stay in the position. So it's a really good option to do that. Hence why options are so cool. You give you options. So we have this contract for I think a little bit longer. AVGO. How many days we have it? We have it for about 11 more days. So it does have like essentially next week to continue to push if it's going to do that, and I think it's already doing that. Oops. Oh, we have to go back to the SIS trader. Let's go. We'll pull back into that so that we can see that bad boy do exactly that. ABG. Boom. Yep. Kind of the same thing in the Qs. Very nasty setup, looking to continue the upside. When you look at this, it's clearly a bull flag. It pops up via Friday. That's where we took the roll, and it has since made relative pivot on the 10-minute chart, higher lows here, and then higher highs here. So it's very nasty bull flag. It goes up, trend sideways with the potential to continue into the 185 area, which is I think absolute highs. Yeah, it is. We'll push it up here a little bit. Thank you very much. We want to get absolute highs. So with the potential to go back to kind of absolute or relative highs. Something to keep in mind though, there is a potential for a head and shoulders pattern. We want to keep that in mind. And here, let's do this just to see is there potential for danger, right? Remember, these are invisible lines in space, so it doesn't necessarily have to respect our invisible line in space, but it's just to know maybe the market will see this and react off this invisible line. So it's just something to see, hey, if it's starting to make relative lower highs and lower lows in the short term, we kind of want to know that, because there is a potential for a very one wide shoulder here and a narrow shoulder here for some drop, and then it could continue on that drop. So it's something to keep it out. Either way, we have our profit already. We've taken our hard-earned money off the table anyway. So anything else after this, we get to write home them out. It's a good time. Hopefully there is some continuation after some very nice pullback into the moving average cloud. Kind of like this. We want to see like this setup right here for AVGO. Nasty rip, man. Absolutely massive, nasty rip. We did take this rip though. We did actually get in for a long-term position here because we wanted to be an AVGO overall. So we do have a position here, and we also took a position here, and then closed it for relative pretty much break even. This was a contract, but this was an actual buy. So because this was an actual buy, kind of similar to the thought process with Nvidia, we went on and took that AVGO buy. But there was another opportunity at this pivot low weekly to get in. Keep that in mind. AutoZone, another very, very clean, nice follow through setup. I don't think we took this because of our situation, what we were doing kind of locally to kind of pulling some profits off the table. But yeah, there was a very clean setup here, uptrend, right? Setup candle right there, stop out relative lows, and very nasty rip. This is kind of a blowout candle at highs. So you would be looking to make a decision, pull some profits off the table, stuff like that, right? At relative highs. If you haven't already, you probably should have done that because there is a very clean setup candle right here that says, hey, this is a good time. So when market opens to take some off the table relatively, right? Relatively there. So yeah, as this kind of pings off relative highs, if this still opens up in relative high territory, it's just something to keep in mind. Hey, I probably could take some profits off the table and be in the trade absolutely with no risk to me. Yep. So ELV is next. Clear defined downtrend. Setup was back here. You could have took that and would have been nice to follow through. Not necessarily pulling back into the wave. So not really enough risk to reward there. It would have been a nice base hit. But you know, we're looking for a little deeper pullback. So what are we talking about here? Let's go back here. Here's your negative indication, right? Your first moving average cross that you're in negative territory to the downside. And then you see that. And then what's in play here? You got this candle that's in play. So as it breaks below the low, you get a stop out the high. You might be a 2-bar professional. This is what I'm talking about, 2-bar professional. Because it's so tight, you want to give your stop some room, a little room. And you see this tight candle right here. You'd say take the next 2 bars. So 1, 2. I could take this candle right here as my stop. That's what I mean by 2-bar professional. This is a prime example of when 2-bar professional makes absolute sense. You can see the setup here. It breaks below the low. 2-bar professional allows me a little bit more room on my stock where the downtrend started. Sometimes it comes back and it tests where these initial sellers got in. It'll come back and it'll test that level. So you do not want to get caught up in that stop out when there's a very clear pivot level, at least 2 bars, for you to look at that as a potential area where sellers will really step back in, add to their position. They like that zone. So if it comes back, the likelihood, oh, this is the price I shorted last time. It's already in a downtrend. I want to take that price again and really add to my position as people get caught off sides. These people, right? They get caught off sides. So you can take that 2-bar professional max, right? Boom. And what's your risk? You got 492 all the way up to 525. This could be something where you're like, ooh, again, only 2% in your account. So don't think, oh, because it took that massive risk to me. If you're only getting 2% in your account, it's not a risk, right? You're willing to set it and forget it, keep to the rules, and you're not going to be necessarily too concerned about getting stumped out, right? You got the edge in your favor, but it does happen. You get stopped out. Very nice follow through. Would you be okay with shorting at 491 and then having a nasty blowout candle here at 397? Essentially a $100 move. Would you be okay with that? Would you be okay with that? That's kind of the point here. I would say yes. 2-bar professional, boom, boom. Nice follow through. And also too, the reason why you should be a 2-bar professional here, here's a gap. Does it fill the gap? It does. It fills the gap. So already right there, you see that there's clear signs of danger and you just account for it, right? If it closes the gap and then continues, it's probably not going to go in your favor anyway. So closing the gap is highly likely. So if you take the short here, you just see the gap there and put your stop accordingly within 2 bars, which keeps to our rules. We already went over McDonald's. Meta, yeah. Meta is in the XLC and I think XLK category. Here we can hop over here and see our holdings to see if it's in both. We'll come over here to our handy anything here. I think it's in both, so we'll go look at XOK. Makes up a big portion of the tech sector, maybe. Let's see. XOC, Meta. Microsoft. Nope, it's not in the top 10, not top 15 holdings of the XOK, but it might be in, it's definitely in the XLC for sure. Yeah. So we'll go look over here. So it's in the XLC as the top holding in the XLC at 1970. So essentially almost 20% of the XLC is made up of Meta, and the other parts is Google and Netflix, right? So shout out to those. Shout out to this big beefy boy. We go back over here. So Meta looking strong, holding up the XLC. And that's probably why the XLC is in the stratosphere. Shout out to Meta. And if we go look at our flex grid for the XLC, it'll probably reflect that as well, right? So this is kind of what your sector chart would look like if it's just absolutely going to the moon and popping on all cylinders. Buying the ETF is solid, right? Meta, Google, EA, you have Netflix somewhere. Yeah, there it is. Just massive, right? The outperformers here in Netflix, Google, Goog and Google, right? Shout out to Goog and Google. And then Meta looking snazzy. You also got EA and I think T-Mobile, if I'm not mistaken. Comcast is slightly lagging. Carter, he made an absolute killing on Charter Cable. So let's go take a quick peek CHTR, kind of tell you like how we kind of set that up so we can make some very clean lessons, right? Setup candle here, even pre-earnings, but we like this juicy candle here. So you can almost put your stop here. It's a little too tight, so 2-bar professional. The next lowest bar is right here. That's, you know, respect all your buyers. This is where you put your stop. Only 2% of your account. And earnings came out, it was massive. But what we did, seeing that this juicy candle was right here, I typically take the opportunity when you see a tight candle, tight setup like that, to put a little bit more risk on the table, targeting pivot highs, right? And so that's kind of how we played this. This is where we took we took a vertical buy, but we also added and took a butterfly. And it was only, I think, for a week or 2 weeks, but the butterfly was targeting this pivot, this pivot high weekly candle. So like the low was like 364 and the high on the butterfly was like 338. And it was relatively cheap. And then we also got the vertical. So when it absolutely blew up right into the butterfly that week, which that's what it's targeting, the pivot, it took up, kind of paused at the pivot. We went on and took that off, right? It's for, I think it's like 120% return on investment for the butterfly, but the vertical also, we took that roll and massive profits at around this 374 range. And then also massive profits off the second roll at the 403 level, right? So from essentially the 330 level, shout out to the system, and then all the way up to the almost 410 level, right? 330, 410, massive triple on that return, right? Really good stuff. And so it was almost like immediate, right? Nice, tight, juicy setup here. We were like, okay, cool. We'll put a butterfly on because that's the setup that we're looking for. And it just pinged on all cylinders, rolled it, closed the butterfly, kept going, rolled it. As it broke below the low of this setup candle here, we just went on and let it go because after that, it never really made relative highs post that, right? Remember, we were telling you, shout out to Oliver Velez, if there's a pullback within the upper third, the continuation is relatively high. But as it gets into this 50% to 100% range, the rate of follow through, immediate follow through, I should say, is really, really low statistically. So shout out to us that it, blowout candle here, stop out of the low, the blowout candle, we took it, and then I think we only got to play it for like 3 weeks. So since then, really wouldn't, we would have just been getting theta decayed to oblivion there. 1-2 weeks play, you're done, shout out to you, base hit, or excuse me, mega home run there. And then, using your play to kind of save some capital even on the roll after you've rolled it twice, right? So shout out to you there. In the XLC. Let's go look at some more. So we're talking about meta. We are talking about this Oracle. Let's go take a look at Oracle. So inside Oracle, very, very clean uptrend starting all the way back here at the beginning of the year, essentially. Push this back a little bit. Excuse me. Boom. Right. And then so yeah, we did take a buy on Oracle with some very nice follow through there. I can't remember what the overall for the buy was for Oracle. Like what do we got a vertical, or what was the status of it? We can take a look at that. Right, setup is a pretty crisp, right? You got a setup candle here, no stop out, absolute rip, follow through on Oracle, and then really nice kind of rotational setup here. So on the daily, you can it's almost crisp as day. We'll put this in for you guys. So yeah, we'll put it in relative, boom, relative high there, and kind of testing that rotation. We'll put this at absolute highs for the rotation as red. Boom. There's that. And then really the pivots. We got, yeah, perfect. Pivot high there, boom. Rotational pivot high, boom. Look at that, right? So you're seeing us mark up that bad boy right there. So efforts to break above is just slightly respecting that level, respecting that pivot, right? And then absolute highs over here. We kind of see what that looks like relative to the weekly chart. But yeah, setup in effect, fully in effect, uptrend, even in the 3 ATR territory. Not too bad. Pull back into the wave. So if it can respect the 8-period moving average, going into what we like to call over here a power trend. It's not just an uptrend, but it's an uptrend that stays relatively strong outside of the 8-period moving average. 8-period moving average is almost in close parallel with a 3 ATR. That's a power trend to me. Kind of like right here, power trend, power trend, power trend. And the continuation is a little bit more likely. So when in momentum, you can keep to that. We got Pepsi. I think we went over that. PRG went over that. STZ. In a downtrend, relative downtrend since back here. We'll mark that up for you guys. Kind of presto there, but not really seeing an indication that we like. It did pull back into the cloud, but I'm looking for a little bit more. So like, let's say for example, you did want to take this setup, right? You could say, okay, if it breaks the low, not exactly the setup that we like, we kind of like a little bit more edge, maybe get a green setup candle as opposed to a red one. But you could say, okay, it has respected on the weekly this kind of relative pivot highs over the last these pinging right here, these 3 weeks right here, 1, 2, and 3. So you could say, okay, we'll put this as a yellow, please, thank you, boom, and then we'll mark it as yellow. Okay, as a hazard area. And you say, okay, if it crosses below there, we'll take the entry with a stop out at the high, right? Not exactly something that I'm looking forward to, but let's say we will look back as an indication to get in to this position with the setups that we have. No. You could argue here, right? This one. No, actually, it's a no. Excuse me. I'll take that back. No. Here, but you get stopped out here. Yeah. So yeah, this is probably the best looking setup as it regards to it's respecting the previous pivot levels. It is in a downtrend. You do have a good kind of decent risk to reward. If you wanted to jump the gun a little bit to increase that risk to reward, I would say if it breaks the 50% mark, maybe 2/3 mark, you could get in there, increasing your risk to reward considerably, and then stop out at the high relative, and then take it to the first sign of danger being here, We'll put that relative pivot down there. Boom. Right. First sign of danger there. And then absolute danger or more danger, I guess, down here. Right. So where you could, I'm just giving you levels that you could potentially take profits. So just so we could develop a plan there. Let's go. Thank you. Thank you. Put you down there. Thank you. Boom. Okay, cool. Get rid of that. So yeah, first sign of danger, take profits. Second sign of danger, take profits. Make a decision, roll, close, whatever you want to do there. So that's kind of how I would set that up if I was going to take a play on STZ. Remember, this is for educational purposes, so please, by all means, kind of do your own research and do what you can do and afford for your portfolio and what's in the best interest of you, right? Just because we take a position or make a setup over here doesn't mean necessarily we're automatically getting into the stock. So just keep that in mind, right? There's some cases where I bypass a lot of setups, like we saw with the Amazon setup or the AutoZone setup. So just keep that in mind. Cisco, right? Look at SS or SYY, massive push here. What I would do is I would just want to be cognizant. Necessarily, it's already kind of pushed. We don't want to chase that, but you're seeing unbalanced volume kind of pushing, and you could potentially took this setup here post earnings and say, hey, buyers might want to step in, and they do, but a stop out of the low. Not necessarily the setup we're looking for, but it is in the moving average cloud, so it has a higher probability of actually playing out. We want to be buyers close to moving averages and let things go as they push away from those moving averages. So when moving averages are tight, like it goes into a squeeze or a nice stacked moving average, as some people like to call it, stack positive or stack negative, right? We look for that continuation and it to push away and then look to take profits as it pushes away. So here, right, it's a buy, and this is kind of where you would want to be taking profits. So let's say you, for example, you take the buy break of high of that, boom. This is where you'd be buying. Would you be okay with that? I think most people would say yes at 74 and kind of letting it go at the blowout here of 81 or even the blowout here at 79. So buying at 74, first blowout 79, second blowout 80, third blowout 81. Any of those you could take that, and if it crosses below that it's 79.84, you could say yeah, definitely looking to take some profits off the table, make a decision. But taking profits off the table means you're still in the uptrend, so keep that in mind. Already went over Uber and United Health. Let's go into Vanguard. Okay, very clear buying indication right here on Vanguard. We could go back and we could just see, right, how many buys that we have on Vanguard. Vanguard gets like very clean setup. So if you're in Vanguard, right, we're gonna start looking more at taking more positions in Vanguard. Been in a really strong uptrend since the first month of this year at the 23rd on the 123 essentially. The 21 period moving average never really kind of trends sideways here, but there's a slight death cross there, but not really enough to dictate to the 21 to start pushing down. You can almost argue that this might go into distribution, but really it just kind of takes a slight pause. Like we can actually mark it up here for you guys what kind of does. Sellers kind of step in a little bit on this kind of almost I would say a bear flag, right? Kind of very weakly bear flag. It kind of pushes, and then you see this channel, and then break above with a trend change here, right? So very clean, traditional, weekly kind of bear flag setup, where sellers are finding it really hard to make inroads, and then eventually they just get washed. So you see where that kind of channel is there. Is there some opportunities to get in at the early trend change? There's a nice, there's your trend change back here. You get a buy, then here's your dip. Very nice little dip setup right here. Buy, stop out at the low, kind of add right there. Never really worried about getting stopped out. A blowout candle, very, very crisp. Actually, your first blowout candle from the first one You could argue it's like right here. Definitely right here, bordering in this territory, right? Getting close to 3 ATR, but never really gets up there until right here, right? Your 3 ATR starts here where the bottom part of our channel starts. So this is like your first like weekly indication that hey, the trend might be reversing. You would definitely be looking to take some off the table on that blowout for sure. Very clear sign here that there might be some it's tight and there's a setup potentially forming to the downside. You see that there, boom, and it does follow through. Channels fall through, right? It is clear setup to the downside here as these guys get washed. But if you're looking to take some positions on the buy side, there's one that happens here, respecting all your buyers. You get some follow through, and then you kind of gets washed. So maybe depending on how you play it, you're taking some profit. You're trying to take profits at pivot highs here. You also see the gap fill. So there's your gap fill and a little bit beyond it. But really, even if you get stopped out, you're getting stopped out from 275 down to 267, right? About a $10 move. That's almost probably a full stop out, which is fine. 2% of your account, call it. And then if you get, let's see, does it break high? It's kind of close. It might peekaboo you. No, it doesn't. So you don't really get the indication on breakup high here, but here it's very clean, crisp. Take the bond with momentum follow through. Market sees it goes against this setup here and really runs with it in Vanguard. Same thing here, boom, and boom. Very clean, crisp. You could even take this here or even take this with stop out of the low there as it trends. Let's say, for example, he takes a dip in the top third, continuation, boom, boom, same thing, boom, same thing, case in point, boom, same thing. So a whole bunch of opportunities to rocket into Vanguard. This is, again, relatively new system, but clear and clean defined edge. We'll just keep using it as it goes because it works, right? In XLC, look at that, boom, absolutely massive to the upside. We've been talking about this the whole time, right? So clean buys and then pushes to the upside, very here with a defined uptrend all the way back here, So only want to be a buyer in these markets and catching plays to the upside constantly, right? Constantly. We look back, clean buys right there, very clean buys right here. Early trend change, again, same thing with Vanguard. As it pushes, takes a dip, take a buy, boom, kind of fall through. Very similar to Vanguard, and you can kind of see as it highlights these pivots. It's kind of a no-brainer what we're looking to do if we have a buy bias, or if we're looking for a clean setup, like right here, very clean, boom, even a gap. We zoom in, it peekaboos you in here if you can get in with a slight pullback, with a stop out at that low there, because there's a gap, it came to fill that, and then boom. You'd be happy with that. You'd be happy with it opening right here. You'd be like, oh my goodness, I'm a genius, right? 76 all the way up to 79. Not too bad if you're looking at that. So I'm showing you that to kind of prove some edge there. But I don't get a lot of views on my channel, so a lot of like my friends and family, they watch the channel. We'll go ahead and close. Those are pretty much all the in plays on the day. We're gonna just kind of cycle through the other ones, not taking too much time. Nvidia is on the positive side of this week. So is there some follow through after hours on Nvidia? We can see. We'll go see now. Right. There's a little follow through, right? It pulled back heavily on Friday, so if it respects this level, shout out to Nvidia. But so far, so good, right? Kind of tracking with the rest of the Qs there. So hopefully we see some follow through with Nvidia to the upside. But remember, we have it for a leap, so we're not really necessarily worried. We also have, as kind of went over this one already. If you watch some of our previous videos, we were waiting for it to pull back and come pick us up because it had pushed, came back and actually did come pick us up. And it's now since pushing a direction. But because I don't really like this dip too much, I did end up taking this as a butterfly and not as a vertical, right? Took this as a butterfly. 40.01 is kind of the high side, and 33.98 is kind of the low side. So if it pushes anywhere into there, we could look at some pretty decent risk, very high risk reward with the butterfly. With stuff like that, I'm like, if I don't really like the setup as it regards to like a high impact play, like on the Qs, Spies, Russell, Dow, or an outperformer, relative outperformer, and into still a setup that I think has some potential. The reason why I think it has some potential is, look here, on the earnings, it went negative last earnings call, but here it since has gone back positive. So in with the new earnings call, the market did react to that and in a sense pull back too. So if profits maintain and unbalanced volume maintains and people still find value, it could push back to relative highs, right? That's kind of what we're looking for. This right here and this right here, it can potentially, this is a can come into the fair value gap right here halfway. So I believe it can come back into the fair value gap now that we are definitely in a trend change, right? Very nasty drop. The ability for it to close or even get halfway to the gap is very high between here, really here, and this gap right here. So it's kind of a third of the way there, but the potential for it to close the gap is relatively high. So that's what we're kind of stacking the edges on for SYM there. Also, I think it has a squeeze, so shout out to it. And the squeeze. Go full bear on the day. I don't think there's anything. And no, there, boom. We also have, we're not gonna go. We already did ETF watch list, and we're not doing full weighted. So, cool, guys. I don't think there's anything else as regards to what we got, and so thank you guys so much for joining me. These videos are kind of long, but we do like to do these Sunday night videos and then be a little longer because we want to go through the whole market. So if you like taking a full systematic approach, seeing the setups that are out there, if you guys have some setups that you guys are watching, you guys want me to take a look at, put them in the chat, man. Like we're all I keep the comments on for you guys. So if you guys have something that you want me to take a look at, put it in there, man. We're down to clown. We're down to clown around with this market. So thank you guys for joining me, MC Fire. Happy hunting on Mondays. We will see you on some of the market recap. And you guys have a great day and goodbye. Peace.